Hi everyone and welcome to today's video. Today's video is all about how to choose an investing platform. So that's what I've got coming up for you in today's video. I'm going to give you some tips, tricks and advice about how to choose an investing platform. This is a complete guide, so it will help you to choose an investment provider so that you can get the most from your money. Before we get into the video, please do remember to give the video a like. It really helps out the channel and I appreciate it. Also, if you want to see more videos from me, just click subscribe below the video to subscribe to the channel. Now, thanks for liking and subscribing. Let's get into the video. The first thing you need to do when choosing an investment platform is to decide what you want from your investing. So have a think about what your priorities are in terms of investing. Here are some examples. Do you want a DIY investing platform so you can choose your own funds that you want to invest in? Or do you want a robo-advisor where you can just choose your risk level and then they will choose your portfolio for you? So that's one thing to consider. Another thing to think about is, do you want a low fee investment platform? So is that your main priority? Do you want your platform fee to be as low as possible? Do you want a variety of options? Do you want to be able to choose from thousands of funds, or are you happy to just choose a platform that has one kind of funds, for example, Vanguard? Do you want a platform that has a variety of investing options, so access to lots of funds, also single stock investing? Are you able to invest in bonds? So do you want that variety, or are you happy to just go with a provider that provides their own funds, for example, Vanguard? Do you want a platform that has low charges? So you'll have fund charges, which can be lower or higher depending on who you invest with and what funds are available. So do you want low fund charges? Do you want low dealing fees? So do you want to check whether you have to pay a fee every time you buy and sell, whether it's a fund or a single stock? So there are already lots of things to consider there. Other things you might think about are the interface. Do you have a good website or app that you can use with this investment platform? What is the customer service like as well? That's something you might want to think about. And what sort of support is on offer if you go for a DIY portfolio or if you go for the ready-made option. So have a think about these things and decide what your priorities are when it comes to investing. I'll tell you some of mine. So my priorities when choosing an investment platform mainly focus on the fund options and the fund charges and also the platform fee. So first of all, with the fund options, I'll be looking at a good amount of options for funds. So not just with one provider, but access to lots of different providers and funds that have low fees as well. So I'm looking to be able to access a wide variety of low-cost index funds. I want them to be low cost because I know that that can really eat away at my investment returns over time. So I'm looking for low cost. I'm looking to have no charges when I buy and sell funds. And also I'm looking for a low platform fee as well. I also want to choose a platform with good customer service. I want them to be responsive and able to help me with my queries quickly. So that's something else I look out for. I also want a company that does have a longer history, so something that's a bit more established. That's also something I look for if I'm thinking about long-term investing. One more thing I look out for is flexibility. So I like to have a high amount of control over my investments. I like to be able to choose what I invest in and how. So that's important to me. I also want some transparency. I want to be able to see exactly where my money is going, what the funds were invested in, and I want lots of detail and info about the funds as well. That's something that's important to me as well. Here I'll summarise everything that I've just mentioned, so let's put a checklist on the screen of the things that you need to look out for. The type of platform, so this means whether they offer robo-investing, if that's what you're looking for, if they offer DIY investing, or if it's a hybrid. That's the first thing to think about. Next one is the platform fee. So this can either be a percentage or a fixed cost. Sometimes it can work out cheaper as a fixed cost if you have a large amount in your investment portfolio. Whilst you're building it up, it should be okay to go for the percentage option. Percentages usually taken out every month, but they're charged as a yearly percentage of what your portfolio is worth. The next one is investing options. So what are the options? How many funds can you choose from? Can you choose funds from different providers? So things like that to look out for. The next one is dealing charges. So what are the fees to buy and sell? Are they different whether you're buying or selling a fund or a single stock? That's something to think about. What are the fund charges as well? So whether you are going for a ready-made portfolio with a robo-advisor or you're going for the DIY approach, you'll want to check out the fund charges. So check out if it's a ready-made portfolio, see what the fund charges are within the portfolio, or if you're choosing them yourself, then you can have a look at what funds are on offer and what the fees are for the popular funds. The last big one is customer service and support, the level of support that's on offer and what the customer service is like. That's another thing to consider. So those are the main ones. I know there are many more, but those are the key things that you should look out for when you're choosing an investing platform. What I'm going to do now is take a look at two popular investing platforms. I've got one DIY investing platform and one robo-advisor platform, which only gives you access to ready-made portfolios. I'm going to talk through these and talk through my approach to these two platforms, what I would look out for, and the things that I would notice about these platforms. So hopefully this gives you some examples of what you can look out for and how this translates to some investing platforms. The first one is Hargreaves Lansdown. So Hargreaves Lansdown is a DIY investing platform predominantly. They actually do have ready-made portfolios as well that you can choose from. So nowadays you can choose your risk level and they will present you with a ready-made portfolio. So in that way it's kind of a hybrid approach at the moment. So you do have the option to choose a ready-made portfolio if you're particularly new to investing. If you're comfortable with investing already, then you can still do DIY investing with Hargreaves Lansdown and choose your own funds, which is what I do. They have all of the standard investing accounts on offer. So you've got your stocks and shares ISA. There's also a junior stocks and shares ISA. You've got your GIA, your general investment account, and a SIP as well. The platform fee is 0.45% per year. So this is almost 0.5% of your entire portfolio, and this is charged monthly, and that's 0.45% again. I didn't mention this earlier, but you might also want to think about the size of the investing platform. So HL, for example, controls £142 billion worth of assets, and they've got almost 2 million clients. As for the investing options, you've got a choice of over 3,000 funds, so you can choose from over 3,000 funds with so many different providers. You can invest in single stocks, you can invest in investment trusts, bonds, etc. As for dealing charges, there's no fee to buy and sell funds, and there's a fee of £11.95 if you want to buy and sell shares. The fund charges vary, so it depends on what fund you're investing in as to what the charge is. So you can actually invest in actively managed funds, which will have higher charges. If you want to invest in passive index funds, you can find a large variety of low-cost passive index funds, and they also have Hargreaves Lansdown negotiated discounts as well. So for example, if you want to invest in an S&P 500 index fund, there's the Legal & General US Index. This has a fund charge of 0.05%, and this is discounted already from 0.1%. So this is actually a really low fee for an S&P 500 index fund. So that shows that you can actually get access to these low-cost index funds, which is really good. You can do automatic monthly investing. If you set up a direct debit, then you can choose the amount that you want to invest in your chosen funds each month. There's a little tab which allows you to choose the amount that you want going into each fund every month, and then you can see the total at the bottom. So that's something that I really like. It's important to me that I can do automated monthly investing, and they do offer that, and it's very easy to set up and use. My summary of this one then is it's a DIY platform. It also does have ready-made portfolios, so it's kind of a hybrid. So they are a robo-advisor as well. The platform fee is decent, it's 0.45%, which is about the average, and actually it offers you quite a lot for that fee. So that's okay in my opinion, because you do get access to a large variety of funds, which you don't get if you choose a different provider. For example, if you choose Fidelity, you can only access Fidelity funds. If you choose Vanguard, you can only access Vanguard funds, whereas with HL, you can access Vanguard, Fidelity, Legal & General, BlackRock, amongst many others. There's also tons of information on the website, which I like, and the customer service is good. So the phone line is based in Bristol, and you can actually speak to someone when you can call them up and you can actually speak to someone rather than having to go through a live chat or an email. So that's what I notice about HL as an investing platform. Now I'll talk about another investing platform and what I notice about that one when I analyse it in this way. So this one is Wealthify. So Wealthify is a robo-advisor. They offer ready-made portfolios. All you need to do is choose your risk level. They offer your standard investing account. So you've got your stocks and shares ISA, you've got a GIA, general investment account, and a SIP. In terms of size, they're definitely on the smaller side when you compare them with HL. But they are backed by Aviva, which is a global company. They are the largest insurer in the UK as well. They partnered with TSB, so they got a lot of their customers through them. The platform fee for Wealthify is 0.6%, so this is higher than 0.45%, which was HL. So HL is predominantly DIY, you're paying 0.45% for a DIY investing approach. Wealthify is ready-made portfolio, so you are paying that little bit extra to get your portfolio managed for you and also to not to have to choose which funds you invest in. Within that fee, they will rebalance your portfolio for you as well. In terms of investing options, you are getting a ready-made portfolio, but you can choose between original or ethical investments, and you get a risk level between 1 and 5, from cautious to adventurous. When you sign up, you go through a quiz which will help you decide what your risk level is. So if you're not sure, then you just go through and answer some questions about what you're comfortable with in terms of investing, and then it will show you your risk level. To give you an idea of what the adventurous portfolio looks like, so their adventurous portfolio has around 80% invested in shares, and also 41% of the investments are in the US. When I look at the adventurous portfolio, I think it is globally representative, so that's something that I like about the adventurous portfolio, how it's made up. Also, I notice that they actually invest in a lot of the funds that I already invest in myself. So these are low-cost index funds that track the global stock market. For the fund charges with a ready-made portfolio, you do have to do a little bit more digging. So you've got to dig into the portfolio itself and then find out what the fund charges are in that ready-made portfolio. I can give you an idea. I'm on the ambitious plan, and the ambitious plan has an average fund charge of 0.17%. The average fund charge for all of the portfolios is 0.16%. So you know that even if you're going for the cautious approach or all the way up to the adventurous approach, you are still getting a low average fund charge, which is good. All of the plans contain passive funds, so you know that you're not getting ripped off by them investing in an actively managed fund and charging you a high amount. So that's something that's really reassuring. Some examples of funds that they invest in: they have a large percentage, which is 25%, in the Fidelity US index, also investing in some legal and general index funds and some other index funds as well. And there are no dealing charges. So that was my summary of Wealthify and what I would think of Wealthify if I was looking to choose an investment platform, and how I would go about thinking about Wealthify. I've also talked about Hargreaves Lansdown in this video, so hopefully that gives you an indication of the kinds of things you should be looking out for when choosing an investing platform. That's it for today's video. I hope you enjoyed it and found it useful. If you did, please give the video a like and comment down below and let me know that you enjoyed it. Thanks for watching, and see you next time.